On September 16th, 2 days before the Federal Reserve's 50 basis point cut to the Fed funds rate, U.S. 10-year Treasury yields traded at a 14-month low of 3.62%. Now, since that time, they've rocketed up to a current level near 4.1%. The reasons for the spike in yields as the Fed began its easing cycle are not 100% clear. Some analysts argue that the resurgence of economic data points like GDP and labor data has implied that the Fed was perhaps premature in its ease and that inflation could reaccelerate. This thesis is supported by the 10-year break-even rate, which has risen from 2.02% to 2.33% over the same period. Now, others will argue that the increase in long-end yields reflects a declining demand for treasuries. This is because of the massive amount of bonds that need to be sold to service the rapidly growing U.S. national debt, coupled with a noticeable shift in global central bank appetite away from treasuries towards gold. Or it could be a response to the constantly shifting presidential election expectations, which could alter the path of future spending initiatives or economic policies. Last, we've also seen a significant steepening of the yield curve measured by 2-year versus 10-year from negative 49 basis points in June to positive territory in a current level of plus 14 basis points. Expectations for a further steepening curve could create an incentive for participants to sell the 2-year yields and buy the 10-year yields, which could add fuel to the move higher in long-end yields. Now, if a trader believes that the rally in yields could continue, they could buy the October 10-year Treasury yield futures contract at 4.04 and target a move back to the April highs of 4.73. Now, a stop for this trade could be placed below at 3.70. This trade can make $690 if the target is reached and risks $340 if you're stopped at your level. Now, if a trader believes yields could fall back from here, they could sell the October 10-year Treasury yield futures contract at 4.04 and target a move to the September lows of 3.6. Now, a stop for this trade can be placed above at 4.30. This trade can make $440 if the target is reached and risks $260 if you're stopped out of your level.